Welcome to episode number 40. Episode number 40, guys. I greatly appreciate it for all of your ongoing support. It does support me tremendously, and I am so grateful for all of you that continue to watch my series and all my videos. I am more than privileged to have a stalwart, loyal subscriber base behind my back, so I do greatly appreciate each and every single one of you. So welcome to episode number 40 of Turning $100 into $1 million, a series where I risk a whopping $100 of my own money in an attempt for your entertainment to turn it into $1 million. We do have another stock to look at in this episode, a more popular stock. You probably know it. It's more of a name brand. We're also going to be looking at the current profit and loss numbers as well, as usual. So RF, we're looking at 166 in the green, still remaining in the green. It's not swinging anymore like a pendulum, like it had been doing in the previous weeks of episodes where it would go red, green, looking like Christmas lights. It's been very stable and stagnant at 166 or in the green. And now we're also at 7.64% up. DGLY, a little bit of life. We're not as low as we were a couple episodes ago, but still down nonetheless, 38.06 or 41.89% in the red. Levi, only 38 cents now, or 1.45%. Very, very close to becoming positive on Levi. Viacom, 12.78 in the green, or 84.08%. OXLC, only $6, but it is 15.06%. So you do have to look at the percentage as well. The dollar amount isn't always a great visual. You can be down $1, and that might be half of the entire value of the stock. So you do have to pay attention to that. Still in profit, though, from previous buys and sells. And if you're brand new here, you gotta look at all the previous episodes to get an accurate representation of what's going on here. People just look at the profit and loss numbers and then immediately come to a conclusion about my investing or picks. And of course, this is high risk stuff. I would never put all my money on the line for this. This is all for entertainment purposes only, as you should know. But you do have to watch all the previous episodes to understand where we are and how we got here. So definitely do that. The playlist is on my homepage of my channel. You can start with episode 1 all the way to episode number 40. So go ahead and check that out if you haven't already. But RF, we are looking at the chart now, and 1171 is what the closing price was as of this past Friday. After hours, a little bit of action, basically break even for the day. 1171, 5 days remaining in the green. The 1 month also still very green at about 8% up for the month. 6 months pre-pandemic is included, as well as the pandemic. But if you include the bottom of the market, we are in the green there. Year to date and the 1 year. We also have DGLY, like I said, 25 cents down on Friday's day. So that was a substantial loss. That was almost 10% of the value of the stock. But it did go up right before that. So pretty much back to where it was last week. Not much change here, but still positive for the last couple weeks. 6 months. And hopefully this is the bounce. Hopefully there's a comeback here. Hopefully the start of another uptrend for this stock. But we'll just have to remain patient. We also have Levi. Levi up 20 cents or about 1.5% there. Down 9 cents after hours. 5 days in the green. 1 month in the green. 6 months almost at where it was. We're looking at around March. So if it could go above 13, that would be huge. It has been above 13 for a while, but I think once it hits 13 again, that could set the stock up for a nice play and bounce back. Viacom, usually in the green, but it did take a very small hit, just a percentage point down. 5 days does remain in the green. 1 month also does remain in the green. That's a foregone conclusion there, decisive positive territory. And the 6 months is also in the green, guys, so it's going back to where it was pre-pandemic, and it's not stopping. So no end in sight for this stock. I want to try to squeeze out as much profit as I can on Viacom, that's for sure. Just makes sense. And you got a little dividend there, nice to hold it. Some incentive. OXLC, 5 cents up. 5 days in the green, 1 month though is in the red. Not by too much though, only a couple cents. It's only technically in the red though. 6 months pre-pandemic. If you get rid of that, then it is up for the 6 months. And year to date, we're looking and hitting 5, then 6, etc. But the stock I wanted to look at in today's episode, you've probably heard of it. It is GameStop, or GME. Now, I've looked at this stock like a couple of years ago. I was thinking of buying it or even shorting it. It's a very interesting stock, very cheap, penny stock. And it was very successful many years ago, but retail has been totally crushed, as we are aware. And even as the gaming industry is exploding, GameStop is not following suit. It does pay a nice dividend, though, 28.20%. If you want to take the risk for it, that holding true, then you can feel free to buy it. But as always, as you know, buying very cheap penny stocks that pay hefty dividends are definitely a risk that you're taking on. We don't know if the stock will continue to pay that dividend in the coming years, so you're better off buying a blue chip stock, something of higher value, if you want to get stable and consistent dividends. But at any rate, people are looking at it right now as it is bouncing. So the ticker symbol GME is up 14 cents or 2.67% just for the Friday's trading day. But then if you look after hours, looking at 29 cents up or an additional 5.38% for GameStop. 5 days, even more growth there. 1 month, a lot more growth. We're looking at about 34.5% of growth for the month. The 1 month, even more growth that we're looking at, about 41%. Year to date, though, is in the red, but you can cut it some slack because of the pandemic. Then the 1 month, the 1 year, it's actually the same exact price. Isn't that the same exact price as the 6 month? Just about the same price for the 6 month and the 1 year. So no matter if you bought it 6 months ago or 1 year ago, pretty much be up the same amount. 5 years, though, you get that accurate representation of what this stock is doing and how this retail industry is collapsing and plummeting. Even up until 2013, 2014, the stock was in the mid-40s, 30s. Going further back, see it took a devastating hit. It started hemorrhaging from the 2008 crash. Makes sense. Real estate at the time, and this, especially in 2008, was focusing heavily on the retail side of their business. So it does make sense. But you could have bought it back in 2002 for about $10, and if you knew to sell there at the top of the crash, you would have made a nice 5x there. So what's going on with this stock? Well, let's take a look at some articles, give us the inside scoop. So GameStop, stock moving 9.1% higher. GME was a big mover last session as the company saw its shares rise more than 9% on the day. The move came on solid volume too, with far more shares changing hands than in a normal session. The stock, which remained volatile and traded within the range of $3.94 to $5.03 in the past 1 month time frame, witnessed a sharp increase on Friday. No changes when it comes to estimate revision. Zacks consensus estimate for the current quarter has also remained unchanged. Recent prices encouraging, though. Keep a close watch. Zacks ranked number 4, sell, while its ESP is 0%. Another article from Yahoo Finance, why GME stock is a compelling investment case. Wasn't very compelling in the last article, however. This is very interesting. RF, which is one of these stocks that I actually hold, RF commented and did a statement here on GME, GameStop. So very interesting crossover, one of the greatest crossovers in Logan Cohn's channel history. RF Capital Management LLC recently released its Quarter 2 2020 investor letter, a copy of which you can download right there. The fund posted a return of 18.8%. This is for RF, not GME. In the letter, here's the letter here. GameStop continues to perform poorly, as many of its stores have been closed due to COVID-19. However, I believe that's meaning to say about 85%, because if you read it as negative, it doesn't make any sense. So I believe it's meant to be like the squiggly line that means about. Management has also taken necessary steps, like Foot Locker has to manage. Going forward, management expects positive adjusted EBITDA in 2020. I believe that's talking about Foot Locker. Like several of our other holdings, we are content with holding GameStop at the moment, given its balance sheet strength. We are optimistic that the new console cycle and key software titles will help GME return to profitability. Additional e-commerce sales continues to be a bright spot for GameStop. Between March and April, the company experienced 1,500% growth in e-commerce sales for the quarter. The growth rate was 519%. Yahoo Finance also goes to talk about how they published an article revealing that Miller Value Partners is bullish about GameStop. The investment firm believes that the company would emerge stronger from the virus crisis. In fact, in Q1 of 2020, the number of bullish hedge fund positions on GameStop stock decreased by about 15% from the previous quarter, so a number of other hedge fund managers don't seem to agree with GameStop's growth potential. Their calculations show that GameStop is not ranked among the 30 most popular stocks among hedge funds. That's no surprise. Among hedge funds, returned 185% since the end of 2014, outperformed the S&P 500 index funds. Basically, this is kind of like a puff piece about their winnings and their strike rate of their picks of this particular author. But otherwise, it's kind of a wishy-washy mixed case when it comes to GameStop. Hedge funds are not very bullish on it. RF is still somewhat confident in it. They're still going to hold on to it, but they're not saying buy. But there is potential for GameStop to grow in the near future. So it's up to you. I wouldn't say this is a decisive buy or a decisive sell. You would have to go ahead and make that conclusion. Do your analysis, look at it. If you like it, if you're not confident in it, then don't buy it. It seems this would be more of a long-term investment as opposed to a quick trade. Maybe you can call it a swing trade, but net account value does stand at $167.57. That's it for this episode. We took a look at GameStop. Let me know down below in the comments your thoughts on GameStop. Would you buy it? Would you hold it? Will you sell it? And if you want to see more videos from my channel and you enjoyed this episode, go ahead and click that like button, subscribe to my channel, hit that notification bell as well for all future videos. Looking forward to seeing you in the next one.